Man, these markets just keep on tumbling this week. Another big move down today. Here's the good news, though. Anytime we see big moves like this, there are three easy ways to make money the following day. And if we're lucky, there is one specific type of trade I always look for after a big move day like we have today. We have a lot to cover tonight. And as always, I'm going to cover my favorite trades here for tomorrow. That way you guys have a game plan to make some money on Wednesday. I have three definite setups on my radar and one bonus I hope we're lucky enough to get on Wednesday. Now, before we jump in and get our hands dirty on these charts, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you like these videos, do me a favor as always, hit that like button for me. Give me a shout out down in the comment section below. Thank you so much for tuning in, supporting the channel. But enough for the intro, right? Let's get ready for Wednesday. Wednesday could be the best trading day of the week. Now, let's start tonight off on the Nasdaq and the triple Qs. I get the S&P and the SPY on our 60-minute time frames. I like to use 60-minute charts to plan my trades for the following day. And then most importantly, later on in the video, I'm going to drill down to some tick charts. Remember, tick charts are the best for entry timing. So we'll cover the big picture on the 60-minute, and we'll drill down and talk entry tactics on the tick charts a bit later on in tonight's video lesson. What are the 60-minute time frames telling us right now? Well, you probably don't need me to tell you this. We are bearish, and bearish across the board right now on the S&P and the Nasdaq. We have some really big moves down right now. Anytime we see big moves like this over a period of days, we're looking for a nice deep pullback and a retest of that low. Same thing, S&P and the Nasdaq, nice deep pullback and a retest of that low. There is probably money to make during the pullback. We'll talk about entry tactics on that tonight. There certainly is likely money to make on the move back down to retest the low. I got a bunch of different entry tactics I'm watching, and if we're lucky tomorrow, we'll get that beautiful double bottom reversal. One of my favorite trades after a big move down like this. So again, plenty of ways to make money on this. So three different ways to make money on this for tomorrow. And again, I got one more bonus we'll talk about towards the end of the video tonight. So make sure you stick around all the way to the end. We have a lot to cover here in this video. Now, before we jump into the tick charts, before we drill down and talk entry tactics, let's make sure we get on the same page for tomorrow. There are two things you want to keep on your radar. First thing is durable goods orders at 8:30 Eastern time. That is the major news that we know about tomorrow. So keep that on your radar. 8:30 durable goods orders. We also know that tomorrow we turn the corner into the end of the month and the end of the quarter. So I do expect volatility to kick up Wednesday, Thursday, and Friday into this week. So be aware of that for tomorrow. Durable goods orders at 8:30 Eastern time. And again, tomorrow we'll be adjusting to increased volatility tomorrow in our trade room with members at 8 o'clock Eastern time. Now, back to our charts, because it's good to know when the news is, right? But the money is made on the charts. Let's now go over my favorite trades here for tomorrow. We'll start off for tonight on the Emini and the SPY, and we'll wrap tonight up on the Nasdaq and the triple Qs. As you can assume, the S&P and the Nasdaq are very similar right now, so everything is pretty much interchangeable on these charts here. As I mentioned in the introduction, big move down, bear market, pull back, retest that low. Let's now talk about how do we make money during the pullback. It's not always easy. We can't pick the bottoms, right? So we'll talk about that here in a moment. How do we make money going back down? And then again, my favorite trades here is that double bottom reversal. And as we go deeper into the video, we'll talk about that fourth bonus setup. Hopefully we're lucky enough to get that here for tomorrow. Let's drill down now to our tick charts. Remember, tick charts make everything easier. Time charts are great, but tick charts make the whole process easier. This is a 7,000 tick chart you'll notice in the upper left-hand corner. And then this, of course, if you're watching for the first time right now, that is the 21 EMA. It is by far the most important indicator we use every morning in our trade room. What's the most important factor right now on the tick chart? Well, it's very similar to what we saw on the 60-minute. This is a very big move down. Anytime I see a really big move down like this, there's one very specific situation or setup that we always look for, and that is a two two-legged pullback into overhead resistance and a retest of that low. And again, as I mentioned earlier, there are three ways to trade this situation. Again, I'm looking for a specific type of bear trap on the way higher to get long, looking for that reversal back down to that low, and I love me some double bottoms. So let's talk about these three basic ways to make money, and then later on in the video, we'll cover that fourth bonus setup I keep talking about throughout the introduction here today. So the first thing is a two-legged pullback. We are anticipating a two-legged pullback during the pullback after a big move down like this. Now, in my free trading classes, we talk about measured moves, where basically it is a symmetrical measured move or an A, B, C, D, or a 100% extension off of that low. When I say two-legged pullback, I want to go a little bit further than that measured move. Okay, so imagine a measured move, and we're going to go a little bit further than that measured move. We don't have enough information yet, but that's kind of what I'm looking for that two-legged pullback. Now, during that two-legged pullback, the best way to enter long is to look for what I call a crown reversal. It's basically a bear trap. If you wrap together my failure pattern and my trap pattern, which I teach in the free classes, right, you get a crown reversal. The bottom line is, because we're so bearish overall, for me to get a good safe entry going higher, I need to trap some of these rookie sellers. We assume bears who are selling low right now are, again, way too low to be short. If we can get those bears roped in, I can use their stops as fuel with what I call a crown reversal. It's basically a bear trap. It's a higher high in price, a trap below that low, and a nice, strong signal closing above the moving average. And again, think about that two-legged pullback, 100%, a little bit further than that 100% extension as we go higher. Now, once we start getting higher now, it's easy to think now, there'll probably be some buyers here who will think this is a reversal. This is a great place for a bull trap. Remember, it's been a really, really big move down the last couple days here. So any pop-up that we see right now is probably going to be sold. Let's hope that the rookie buyers think this is a reversal. Once they get long, now I've got them right where I want them. And what I'll do is I'm going to use their stops to fuel that move back down with what I call a failure into pullback combination. Now, at this point, where does the market want to go? It wants to go back down to retest that low. There's one more way to get in on before we retest that low, and that, of course, is with a bull trap above those highs. Let's unpack this again, right? Because I've covered a lot here in a very short period of time. Again, during the pullback, we are trapping bears in with basically a bear trap. I call these crown reversal patterns in our free trading classes, right? That's the way you want to buy it during the pullback. Then as we get up around overhead resistance, we again trap in the buyers. As you can see, traps are going to be what I think the easiest way to make money for tomorrow. Hopefully buyers will think this is a reversal. They'll get in on the pullback, and we can then use what I call a failure pattern, a simple failure pattern, to short going back down. Now, as you guys learned in the free trading course, failures usually lead into pullbacks. We call these failure into pullback combinations. And then before we take out that low, I don't want to sell low, right? We don't want to chase it going lower. We look for one more trap entry, lower low in price, and that, in this case, a bull trap on the way down. Now, if you're watching for the first time right now, none of this probably makes much sense to you. This is all probably foreign language to you right now if you're watching for the first time. But keep in mind, I teach all of these patterns, and I've got hundreds of examples of these on charts inside of my free trading course. So what I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link and take that free trading course, because the strategy I teach in that short video series will teach you a stupidly simple trick that we use every morning in our members trade room to know exactly where the best winning trades are going to be each day. And most importantly, I'll teach you 4 of my favorite entry patterns. We've talked a bunch about them already tonight to help start you making money. If you're missing the best trades right now, if you're not getting the results you want out of these markets, hit that link. Take that free trading course. It's perfect for someone trying to make the jump into full-time trading. And there are probably over 100 different examples of exactly what I talked about. Expecting that 2-legged pullback on the way up, looking for that bear trap to rope in the sellers, use their stops as fuel. Once we get that pop up, now trap those rookies in. Let those buyers commit. It's an overall bear market. We do not think this is a reversal just yet. Once those buyers get in, it's that failure to send it lower. Watch that moving average as it rolls over for that first test off the 21 EMA. That's my failure into pullback combination. And then we know where the market wants to go, right? It wants to take out that low. As it tries to take out that low, we want to sell as high as we can. And we do that with a trap pattern, right? On the way back down. Crown reversal, buyer failure, pullback combo, and a bull trap on the way back down. Now, we might get all of these. We might get 1 or 2 of them, but these are the ones I'm watching on that deep pullback and that retest of that low. And remember, later on in the video, I'm going to cover one of my favorite trades here. We'll cover later on the Nasdaq. Now, a couple things I want to go over, some variations of this. If this market was to really jump, right, and really rip and run higher, we talked about a 2-legged pullback and how that will usually go a little bit through that 100%. But let's say in this example, let's say it really rips and runs higher here. I would love that, right? I would love that because I will be looking for that crown reversal off of that low. So if it really rips, right? Remember, we've had a big move down for a couple days, so it should not surprise anybody if this thing really squeezes and rips running higher. This is a good thing, right? If we're able to get that long trade going higher. What I want you to be aware of, though, is if we see a really sharp correction, one small adjustment I'll make tomorrow is instead of looking for a one-try failure, I'll look for these buyers to try once, try twice, and then I'll look for that short, that failure into pullback, right, into that trap. It'll be the same basic idea, except again, if it really bounces hard, if it really rips off of that low, right? If that 2-legged pullback is a lot bigger than we anticipate, because again, it's been a big down day, been a big down week ever since FOMC last week. If it really rips and runs higher, just give the buyers a little bit more credit for that momentum and let them try twice. It's simply a 2-try variation of that failure. And again, if you're watching for the first time right now, this may not make a lot of sense, but I cover this in a lot more detail in the free trading course. So one small variation. Now, last thing here on the S&P, and then we'll jump over to the Nasdaq here tonight. At that low, how do we buy off that low? Right? How do we buy off that low? Because that is oftentimes one of the most lucrative trades we get. Let's say now we get that deep pullback. We trap those buyers in. We run now back to retest the low. Who is trading down there, right? Who is trading right there? Who do you think is trading at that double bottom? Well, it's not professional sellers, right? Experienced sellers are selling nice and high. In fact, you could easily argue that the experienced professionals in the market are probably taking their profit at that low. So is it safe to assume that the sellers who sold high are going to be buyers down here? They will, won't they? Because that's the only way you get out of your short position. So in this area down here, all the professionals, the big money traders, are basically buyers at that low. Now let's hope we get some rookies. Okay, let's hope now the rookies who possibly got trapped on the bull trap off the high, let's hope now they walk in and try to short into that low. I talked about a 2-try failure pattern a few moments ago. This is the exact same scenario. So when all professionals are getting out of their position at that low, if we start seeing the bears come in, try once, try twice, we can then start using their stops to fuel that run back where? Back up to take out that high. one of my favorite trades. Again, looking for that two-legged pullback, trap those buyers in, run it back down to that low when all the smart money is taking their paycheck at that low. Let's trap those bears in. Once they try twice, remember, higher high, right? Higher high in price. Once those bears try twice, then we got them. We can squeeze their stops and look for that run back up to retest. And this may end up becoming one big trading range. Go up, trap the buyers in, 2 tries, and back down into that range. Trap the bears in, 1, 2, and back up into that range. Ranges are very common after these big moves. So trade the edges, buy the lows, sell the high, trap those traders in, and run those stops to make money on Wednesday. All right, so that covers most of the game plan for tomorrow. We talked about one extra bonus trade. Let's not make you wait any longer on this. Let's go to the NASDAQ here now. The NASDAQ is virtually the same exact situation as we have right now on the E-mini S&P. On the 60-minute chart, we have a big move down, grinding lower. We are yet to get that deep pullback and that retest of that low. And just like on the E-mini and the SPY, there's probably money to make on the pullback. There's likely very good money to make on the move back down. And again, that double bottom, one of my favorite trades here, we would look for after a big move like this. Let's now drill down now to our tick chart. There is a little bit of a difference on the NASDAQ tonight than we saw on the S&P. You can see that trading range right there on the NQ. I'll tell you right now, these scenarios, anytime we see a bear move like this into a trading range, right? If they don't hold the underbelly of that trading range, this could potentially blast all the way back up and take out what I call a pendulum swing on the other side of that trading range. So just like we talked about on the S&P, I'm looking for that two-legged pullback, trap those buyers in, failure into pullback, into trap, right on the way back down again. Same exact situation. Again, on the NASDAQ, though, this has potential to really pop, right? To really pop. The bears have been pretty good over the past week or so, so we'll see how it does. But again, on that pullback, look for that crown reversal, right, for that pop going higher there, and then rope them in on that move down. So virtually the same exact game plan that we talked about on the S&P can be applied here to the NASDAQ. Now, let's cover one of my favorite trades here after a big move down, like we've seen over the past couple days here. And this can apply both to the S&P and the NASDAQ. One of my favorite trades is if the market begins to go sideways after a big move down. Now, in the free trading classes, you guys are learning about ranges, right? We know that ranges act like magnets, and ranges love to rotate. They love to rotate back and forth, right? Just as we saw on this one right here, right? Bear market into a range, it rotates back and forth. If they can't hold the underbelly of that range, it's going to want to rotate roughly about the same amount on the opposite side of that trading range. Again, it's called range rotation. Ranges are balanced markets. So if we start going sideways here, and again, this also applies to the S&P as well, if we start going sideways in a range down here, which is very common after a big move, my favorite trade is a fake out breakout below that trading range. Now, watch for a breakout below. Again, we'll know more about this in the next few hours, overnight, into Asia, into London. So keep an eye out for that trading range. If we break down below the low of that trading range, we're very bearish. So in order for me to get long down here, and why would I want to get long down here? Because again, the potential for it to rotate all the way back up, these can be very explosive moves going higher. But what's the problem though? The problem is momentum, right? A lot of bearish momentum going lower. So I have to pick my spots wisely. And to do that, we're going to use one of those crown reversal patterns we talked about earlier in this video. Remember how it goes? Remember, bears try once, bears try twice, get that higher high in price, and that bear trap off of that low. Now on trades like these, again, underneath the trading range after a big move down like this, I'm looking for, remember how it works, higher high in price and that trap low. Where are targets? Targets are easy. Half off at the other side of the range, and then leave that runner for that pendulum swing. That could be a very lucrative final target on the opposite side of that trading range. And who knows, after a big move down like we've seen the past week or so here now, this could be one of those times that triggers that big, massive squeeze. So I will try to leave a runner to see if we really get that big push higher. Now, think about this though, right? If we end up back up around resistance, right? If we end up all the way back up around resistance here, okay, now what do? I'm looking for a short. Remember that pattern we talked about a few moments ago on the S&P? If we rip, right? If we rip off of that low, what do? You don't pick the top. You wait for the buyers to come in, let them try a couple times, and sell right into their stops to turn this over and run where? Back down to the other side of that, right, of that trading range, right? Mark up your lows and leave that runner, right, back down to that low, all right? These are my favorite setup after a big move day. Look for a range, wait for a breakout below that trading range, trap those bears in with a failure pattern, or in this case, a crown reversal pattern. Again, you'll learn a lot more about that in our free trading classes, and then hold on to that runner as we go higher. Once they complete the pendulum swing, then what happens? Do buyers come in? Are they successful for a full-blown reversal? We'll talk about that more tomorrow in our trade room. Or do the buyers walk right into a bull trap? Let them try once, let them try twice, and light those stops up for that run back down into that trading range. That is what I'm looking for tomorrow if we see a trading range setting up overnight. So pretty easy game plan for tomorrow, right? Looking for that two-legged pullback, and that run back down could be a very explosive two-legged pullback on the Nasdaq. And let's all hope the trading gods are watching down on us here tonight and give us that juicy fake out breakout below the low of that trading range. All right, the game plan is ready for tomorrow. I am excited just talking about this right now. Now, tomorrow morning, there is no better place to learn this stuff and trade along with me than in our morning trade room. We open up every morning, 8 o'clock Eastern time, with all the advanced members here in the SOT community. I would love to have you there, learning, asking questions, trading along with us. It is a fantastic experience for everybody involved. I'll put all of the trade room links, I'll put all the free video course links down in the description of the YouTube video. So grab those. I would definitely recommend grab the free course links first, get that going, learn the basic strategy, get the momentum at your back, start making money with the free classes, and that'll get you ready to come out and trade with us every morning in our morning trade room. If you need help, if you got any questions, if I can help with anything about getting access to our free classes, don't be afraid to call the office or use live chat on the website. If you need help, we're always here to help out every step of the process. Right, guys? Thank you so much for tuning in, sticking around all the way to the end. Hope you learned a bunch tonight on the video lesson. Hope you use this knowledge to make a killing tomorrow with those bear traps and those bull traps. But enough of the video tonight. We'll come back tomorrow morning. Hopefully I'll see you tomorrow in the trade room. If not, same time, same place tomorrow night. We'll do it all again and get ready for a very important Thursday trading session. Guys, thanks for being here. My name is Joseph. Be well. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.